Okay, and I will close this. Okay, I will close this company. Okay. You double click. So when you would like to restore from a backup, so you go to the Sage 50 Premium, so the software, you double click, and you have a list of options there. So is it the current process? No. Okay, you have multiple options, you see. The third is what? Restore from a backup, right?
Yes.
Yes. So you click on and you follow the steps. Okay. So which backup you would like to restore from? So you browse. So this is a backup that is existing on my desktop. You see the backup April 13, the middle of the session. Okay. You click on. So I selected this. April 13th, you see, you select the April 13th, middle of the session, you click on next. And then next. And then you have to browse which location you would like to store this company on, you see. So I will say this is the April 13th session. Middle. Okay, no problems in the middle or not. So April 13th session, that's right. So I click on save and then next and finish. Zakaria, is it fine for all these steps?
Yes, thank you so much, sir.
Okay. Okay, guys, can I make sure that all of you are in? Zakaria, did you get the access to the database or not yet?
Yes, it's clear. Thank you.
You're welcome. Okay. Let's go back, guys, to this second half of the session. So we're going to discover now this what we call the credit memo. So we will talk about the credit memo later. But before that we go for this, I would like to ask you to go to client revenue, the client revenues module, and then you go to client invoice. And we're going to create another invoice or a new invoice. Creating an invoice. And first thing first, you select the customer management consulting. And you're going to sell to management consulting. But before that, I will go to the sales details, etc. So please, on the date, you put March 17th. March 17th. There is no code or order before. This is just an invoice. But I would like to check on this, guys. You see the invoice number is automatically providing 2. What does it mean? What is providing it systematically 2? Is it really important, these two? You see, it's a required field in which is systematically filled by the system. We have two. It's a sales invoice. Listen, guys. For the sales invoice, the system will be getting something that we call pre-numbered invoices. We see that pre-numbered invoices. So if you create an invoice, so the number will be systematically offered. For example, is number 1, number 2. So is it possible that we create an invoice twice? It means that I'm creating an invoice number 2 twice. No, it's not possible. And this is to protect the company from what we call creating. So what? Protecting from creating what we call fictitious invoices. And when we protect the company from creating fictitious invoices, so we cannot overestimate our revenues. Okay, but you see, guys, but ethically speaking, is it possible that we create, let's say, some fictitious invoices? Yes, it's possible. And of course, this is a fraud. This is a fraud, so we cannot do it. So the system will not be giving you the chance that we create two invoices with the same invoice number. As an example, you see that the system is providing providing two systematically. But if I click on invoice number, I change it to 1, okay? And I go to fill in the numbers. You see that we're selling to management consulting. You double click, for example, an existing inventory of A30, let's say a quantity of 10. And an A15, a quantity of 10. All right, so we have 10 items of A13 that were sold and 10 items of A15 that also they were sold. So you see the early payment terms are 30 days. You see that net due in 30 days. So you can fill in the, let's say, percentage if there is a discount, for example, 2% if paid within 10 days. All of this is on March 17th, right? All right. So before that we click on process, you can see the journal entry under the report display revenue transaction detail. Okay, you click on, you'll find these transaction details. So you see the list of the accounts that are used. Guys, we're talking about sales. And in general, when we remember, guys, the sales, we remember the perpetual inventory system that we record with. For example, when you're selling on credit, you will be debit in what? Accounts receivable. You will be crediting sales revenue. And all of this is for the selling price. Okay. And at the same time, you will be recording the cost. You debit cost of goods sold and you credit the inventory. And this is not for the price, but it's going to be for the cost. Okay, so this is the journal entry that we should find. If you look at this journal entry in details, you'll understand that it's the same. Why? You see that we debit account receivable for 1,300 is clear. Okay, and you are crediting. You see it for the sales revenue, we should be crediting it for 1,300 as well. But how you see the 1,300 in the revenue? You credited two revenue accounts. So it's 1,000 for the sales of computer supplies and another revenue for sales manual for 300. So the sum of the revenue is 1,300. So it's approximately the same thing that we presented here. So it's just for statistical purposes. So we'd like to see the details on the revenue for each component, for each element of the inventory. We have sales computer supplies and sales manuals. And you debit the cost of goods sold and credit inventory. You see the COGS, cost of goods sold, computer supplies, cost of goods sold manual, and you credit what? Computer supplies manuals. So you debit cost of goods sold, you credit the inventory. It's much more detailed. You see that in the system. Okay? And try to click on process. You'll see something amazing. I changed the invoice, you see? The invoice number is 1, right? So it's possible that I change the invoice number. Yes, you have to do it manually, but the transaction has been recorded, and you see the next invoice that is going to be offered, the sequence will be 2. So since the sequence is 2. All right, in practice, you should not alter the invoice number because it's going to create 2 invoices with the same invoice number. See that if you click on find invoice and you click on, so how many invoices do we have, guys? 2 invoices. And these 2 invoices are what? With what? 1. Invoice number 1. So it's impractical that we do that. So usually, guys, we prohibit, and this is by the use of restrictions, they prohibit the creation of 2 invoice numbers because this is a student version or an instructor version, so we can do whatever we want. But of course, in practice, we are blocking the possibility to create the same invoice number or to create an invoice with the same invoice number of another invoice that has been created earlier. So I go back to this invoice. You see, guys, I'm going to adjust this invoice and I will just change it to become 2, invoice number 2, and I click on process. Yeah, guys, by changing the number of the invoice, what happened? 2 transactions were recorded, reversal and correction. So if I go to reports and you go to transaction details, and I would like to see all the transaction details with corrections. And I go to the last, you see the G14, the journal number 14. I adjusted just the number, you see, the number of the invoice. What happened? You see that the journal entry has been reversed and it has been recorded the same. But the only thing that I have to say is that this correction is because just we changed the invoice number, so that the system, even though the error is not in the amount, but the system will be considering that every single adjustment to the invoice should be making it traceable. So we have a reversal and we have a correction with the same debit, with the same credit, with no difference at all in terms of amounts, etc., and accounts that we use. All right, so we sold. And go back to the invoices. You see that the list in the invoices. Now we have the invoice number 2 for management consulting, 1,300. Okay, this is transaction number 16. All right. In practice, guys, and let me say, and I need your attention now because we're going to refresh memories on after sales. You see that after, okay, for example, on March 17th, we sold some inventory. Okay, and I say that after 3 days, I think that on March 20th, some goods were returned. So guys, this is a transaction that is so familiar in practice. When goods are returned, I don't know the reasons. Maybe the goods are defected. Okay, when the goods are returned, what shall I do in terms of journal entry? Assuming that for the sale, okay, for the sale, we're doing like we saw earlier, we debit accounts receivable. we credit sales revenue, and we debit cost of goods sold, and we credit the inventory. Guys, when it comes to the goods returned, how to record the transaction from what we learned in the basics of financial accounting, particularly. How to record the transaction on which we have goods that are returned, inventory that is returned back to the seller. What shall I debit? What shall I credit? Talking about goods returned.
You credit accounts receivable and debit accounts for sales revenue.
That's right. So it's going to be absolutely correct. So you credit accounts receivable. And in case the sale is on cash, Rami, so you are going to credit cash because it's going to be refunding the customer. Okay, so because this transaction, the first on the March 17th, it has been on credit, so we recorded the account receivable. So we're going to decrease the account receivable. This amount will never be collected. So, and you debit contra revenue account, that's right, we call it the sales returns. You see that sales returns is the contra revenue account, and you reverse the second one. So because the goods are returned back, so you will be, so you will be debiting inventory. And you will credit the cost of goods sold. So it looks like what? Sorry, it looks like a reversal of the previous transaction, of the previous journal entry. It looks like a reversal for this. But how can we record these returns using the software? That's why we're going to apply this on the software. All right, guys. It's going to be what we call the credit memo. When we say that credit memo, so it's very simple. So you see, for management consulting, we have an invoice number one, the invoice number two, so the amount is 1,300. So what you're going to do is simple. So I said that go back to client's invoice, just to get some refreshment. And this is the invoice number two. Okay, this is the original invoice. We will not be adjusting it, by the way, but I would like to go back to see the details. So we sold 10 items of A13 and we sold 10 items of A15. Imagine that management consulting, the customer, found two defective, let's say, items of A13. And the customer returned back these items to you as a seller. What shall I do and how can I record these returns? I have the possibility, guys, to make the returns this way. You close, you create a new invoice. Okay, is it going to be invoice number 3? No, it's not going to be invoice number 3, but it's going to be invoice number 2, but I say that 2. I would say credit memo. So is the invoice number 2, is it just going back to this to make it traceable? Is the invoice number 2 is the same invoice, but it's a credit memo. Okay, so it's a contra invoice, in other words. You will understand this in details. So you have to select the customer. Which customer? Management consulting. Management consulting is this one. And the date the goods are returned is on March 20th. That's exactly what we said. It's March 20th. Okay. What happened on March 20th? We see that from this item of A13, 2 units were back. The problem is if I write 2 in the quantity, it looks like that we're going to sell 2 units. And look, if you prefer, at the report. you'll find that the journal entry looks like you're selling 2 units. Okay, account receivable, sales revenue, and you see the debit cost of goods sold, credit inventory, right? I would like to make it the opposite, guys. How to make it clear for the system that it's the opposite. It's not sales, but it's goods that are returned. You see the two, guys? Just you add minus to this quantity. Exact. So the system is not the first time that we're working with minus in the system. You see that, for example, when entering a balance of a contra account, you remember the accumulated depreciation, for example, or accumulated amortization. It's a contra asset account, or a loans for the outward account. It's a contra asset account. So when presenting it with the asset, put the minus. So the system will understand that it's a contra asset. Now it's a contra, it's a reversal of the sale. We are creating a sales invoice, so it's an opposite of a sales invoice. So to make it clear that it's the opposite, write that's -2. And if you go to the report and you display the revenue transaction details, you will find, guys, that it's the opposite. How is the opposite? So you debit what? You debit the inventory. You reverse. You see the reverse the revenue. You debit the revenue. You credit the account receivable. You see the account receivable is credit, and you also credit cost of goods sold. So it looks like what? Like we're talking about this. So that's exactly what we're talking about, is the reversal of a sale or of a regular sale. So the system will understand this clearly. Nice. Okay. So now you can, we can process these returns. Okay. And please, guys, before that I click on process, I need your attention here. So I will be clicking on the process in few seconds, but I'd like to ask you to check on the balance or the outstanding balance of account receivable for management consulting after clicking on process. So I'll click on process. There's a G17 that has been processed. So what happened to the outstanding balance? It is decreasing by 200. Makes sense? The goods are returned back to the company. Make sense?
Yes.
Yes. And this is true, guys. If we sold in cash, it's not going to be credit memo, but it's going to be refund. So you're going to refund your customer. So the only difference between the first alternative and the second alternative is that when making the sale on credits, so of course you will not be using the account receivable, but you'll debit cash. Okay. And of course, in the returns, you will not be crediting account receivable, but it's going to be cash. It's a kind of refunding the customer. Okay. Let's go to receipts because, okay, we created two invoices right there. So we have an invoice with management consulting 1,100 and another invoice of 3,250. By the way, guys, this is March 31st, you see 2023. If you'd like to see the age overdue client invoices summary or details, so you can go to it before that we go to the payments. You see all of this are current. Just I'm going to this age overdue client invoice to show you this minus 200. Do you see it, guys? So this is the credit memo. You see the invoice number 2. We have the 2 credit memo. So it's clear that we're talking about the same invoice, and this is for the management consultant. So they're presented back to back. You see, back to back. So this is invoice 2, this is credit memo. If you have invoice 3, you'll see it later. 3, 4, 5, etc. But we present them ordered. You see the date is March 17th, so we sold 1,300. So now we're getting back to 100. So the outstanding, or the amount outstanding, is 1,100. So this is the total outstanding balance of account receivable. You have 4,390. The good news, that is March 31st, 2023. All of these account receivable are not yet due. It means that all of them are current. It means that we still have time. The customers still have time to pay. So there is no risk, actually. So we don't have a past due account receivable by more than 61 days, making it much more difficult to collect the money, of course. Anyways, let's go to receipts, and we're going to create a receipt. So we're going to collect the money. All right, which customer? So you have to select the customer first. See, for action line, do we have any outstanding balance? You see that nothing. And this is confirming that we have in the database. It's 0 outstanding balance, so nothing to show in the table. If you go to management consulting, you will find something. Okay, you will find something. You will find the 1,300. You see it? Okay, and you have also the credit memo now. So from this invoice and from the credit memo, of course, you can proceed with the receipt or the collection of the money. How much? Of course, if there is a discount, the discount should be counted. For example, I can select March 24th. Yeah, guys, if you select the March 24th, normally can تتفكر invoice, so we still have a discount. But to validate whether we have a discount, you see, guys, that we have a discount available. What is it? 26. Okay, how much is the discount? You can validate it, or you can alter it. You can change it. For example, you can say that the discount is just 10. Okay, and you proceed with the amount received. The amount received, so you can say that I received 1,090. So anyways, so I'm just trying to present to you how to proceed with this receipt. All right, so you discard, do not record it, so keep it the 1,100. But let's go to the receipt, and we create a receipt with the software corporation, not for management consulting, software corporation. You select the dates is March 24th. Okay. Is the invoice number 2. The date of the invoice is March 7th. Because we have the discount available is indicating 98.7. So we have a discount. So is it taken? You validate it if it is taken, or do not validate it. It means what? You click directly on the amount received. Yeah, guys, even though sometimes you have a discount available, if there is no discount that you're offering, of course, throughout you can proceed with just the total amount. And of course, under the report, display transaction details, what happened? You'll see that you're debiting your checking bank account or your cash account and your credit account receivable. All right. In case of collection, and I'll go back to the slides, not the slides, but this Microsoft Blackboard, they said that I'm moving to on March 24th. Okay, collection. Say that collection from the customers. From the customer. What is the journal entry? Normally, guys, it's so basic. We debit cash, you credit accounts receivable. The problem is, what if the collection is with discount? What does it mean? That as a seller, you're offering a discount, and if the payment has been made by the customer within the discount period, so of course the journal entry will not be like this. So you're going to debit cash, and you will be debiting what? Contra revenue account, we call it the sales discount. Contra revenue, it looks like an expense, by the way, sales discount. And your credit accounts receivable. This is on the date of the collection. So of course the cash will be debited for the amount net of discount. This is the discount. And this is the full amount. Okay. Let's see what is going to happen if we apply this on the software. So you see, guys, you remove the amount received without discount. You have a discount available of 98.7. So you validate it. So you click on discount taken, and you also validate the amount received. The amount received should be net of discount. Report, display, receipt transaction details. You'll see how it's going to be recorded. So you will find, guys, checking bank account, you see, and early payment sales discount. You see that sales discount is a revenue account, but it's presented in the debit, so it's a contra revenue account. So is it decreasing the revenue? So by 98.7, and your credit account receivable. See that the journal entry is fine. Okay. If, of course, you receive the money by check, so you have to indicate the check number. Otherwise, you can change the method. So you can see that I received it in cash. And I click on process. Journal number 18. See that from for software corporation, we don't have any outstanding balance. Everything has been paid. And if you go to the invoice and you click on find the invoice, you remember, guys, this invoice number 1. So if you select it, you will find the same stamp that we saw for the suppliers and expenses. Is paid. It's fully paid. There is no amount owing. Make sense?
Yes.
Okay, guys, so I move on to another kind of transactions about what we call the customer deposit. Let me talk about what customer deposit. What is it? If the customer is paying your company in advance. Is it possible to find this situation in practice? Yes. If the customer is paying your company in advance. So guys, how to record this payment that is made in advance? I'm receiving as a company, as a seller, right? As a seller in the future, of course, because we receive the money in advance because nothing has been sold. As the potential seller, the money that I received from the customer, how shall I record it? Normally, guys, from what we learn in financial accounting. So if the customer is paying your company in advance, how to record this transaction? So imagine that the amount is, it's $500. Okay, normally, what shall I debit, what shall I credit?
You debit cash by 500 and you credit unearned revenues.
Thank you. So you credit unearned revenue. Sometimes we call it deferred revenue. That's right. Deferred revenue. It's for 500. That's exactly what we learned, right? It's not yet earned. It's not a revenue in all cases. So this one is, it looks like a liability, right?
Yes.
How to make this happen? Using the software, Marta. If the customer is paying you in advance, and this is something that we can find in practice, okay, so it's always possible that we receive the money from customers in advance. So how can I treat this? So guys, you can go to receipt. You see that under the receipt, because it's indicating what? It's collection of money, these receipts. So you create receipt. But what kind of receipt? So you just go to receipt. Under the receipt menu, you can find, guys, what? Enter deposits. You see, is the first element in the receipt. So you click on receipts, then you go to enter deposits. Under enter deposits, from which customer you receive the money. So for example, I can say from Software Corporation. You see, guys, this is the receipt number 4 because as I said, every single document created by the system or generated by the system is systematically pre-numbered in your system. So please do not alter that number because it's so important later to see the list of receipts, the list of collection. Then I can say cash. Okay, I receive the cash and it's a deposit, right? All right, that's fine. So there is no invoice, there is nothing here to pay, so it's just a receipt. Okay. Deposit reference number 1. You see that this is the first deposit that we have to record. The only thing that you have to fill in was what? Deposit amount. How much? Say 500. Okay, 500. Report, display. Okay, what is debited, guys? Checking bank account is the cash, right? And then what is credited? It's an account that is starting with 2. It's a liability account. What is it? Prepaid sales deposit. The equivalent of an earned revenue in all cases because it's a liability here. So you credit it for 500. You understand, guys, what I'm talking about? So now this is how to create a deposit and how to record this deposit. So you click on process. This is the journal number 19. So we receive the money in advance. But something amazingly appearing on the system. What is it? Software Corporation. This is showing what we have as a receivable. So look at the receivable, how it is presented here. It's minus 500. Exact. It means what? So for the system, okay, we understand that it's an earned revenue. Yeah, we know the details, but in this software, it's clear now in the dashboard that you have for the list of account receivable that you're not, you're not, let's say, owning this money. No. It looks like what? It looks like a liability, and this is a liability. It means that you're owing the money to this customer. So you're owing something. Okay, you're owing something. Goods that are expected to be provided, services that are expected to be accomplished, etc. So you see that it's minus 500. And of course, that's why you see that at the age overdue client invoice detail, that every time I say that, guys, please use it, you'll understand how can we treat it. عندكم هنا Rito Software Corporation, you see that minus 500. So it looks like a negative account receivable. So in other words, you receive the money in advance. All right, guys, so this is overall many type or let's say several types of features that we can find in the clients and revenues. We can stay in the clients and revenues because we can find a lot of things, but it's okay. So yes, you can see a lot of reports that are so interesting. So for example, you can discover the client revenue summary or the client revenue details. So please click on you will find the details. They say that on all the revenues for all the clients one by one, and the total revenue that has been generated by. So for statistical purposes, it's so nice. You see the quantity sold, the units, the revenue, the cost of goods sold. You see the profit. This is the margin, the gross profit margin. It's also provided by the system, you see. So it's so important to understand that all these details. You see that the margin is 25% on the A13. It's 17.14%. I said that the gross profit margin 17.14% for the A15. Okay. For the A18, the margin is 19.53%. Of course, you can use all of this details, of course, to see for some statistics. And of course, if you have the database that is huge, of course, you can open all these reports on Excel. If you'd like to manipulate the numbers, it means that you can use these numbers to compute some other ratios. It's always possible. So you open this report on Excel and you can make use of all the functions of Excel that we know to analyze those informations. So for today's session, so let's go to last element I would like to present, which is what we call recording miscellaneous transactions. Miscellaneous transactions, it means it's not sales, it's not purchase, is not banking, but it's something that is not frequent. I'm sorry, that is not frequent, but it could be possible that we recorded. I can say that we did this before. In other words, entering the miscellaneous transaction, we saw it, let's say in the first half of the session. So we clicked on the company module, if you still remember, and we went to the general journal. That was in today's session when we talked about transferring the money from the savings bank account to the checking bank account, because we were in a bank overdraft in the checking bank account. So transferring the money from the savings bank account to the checking bank account. Now, I would like to show you something before that we proceed with the miscellaneous transaction like this one. You go to trial balance. You go to trial balance, and under the trial balance, I would like to see the balance of the checking bank account. You see the checking bank account is 3,697. So now the situation of the checking bank account is fine. So is it possible that we transfer the money from the checking bank account to the savings bank account? So we can do it. So it's going to be reversed now. So click on the general journal and create the general journal. So this is what we call recording a miscellaneous transaction. If I don't have a clear possibility to have a transaction on all the other modules, like for the client revenue, supplies and expenses, inventory, services, employees payroll, and banking, you can go to this. Okay, source bank memo is March. Okay, let's say March 28. Okay, to transfer from checking to savings. The account you're going to debit savings bank account for 1,000. And for the accounts that is going to pay from is the checking bank account. You select it, and it's going to be 1,000. Okay, and you process. All right, guys, so this is the how to make use of the general journal, which is existing in the company. If you don't find how to record the transaction, you can go to this company module, and under the company module, you go to the general journal. One more thing to show to you today's session, and before that I
Sir,
let you
just
go. Yes, please. Go ahead.
something. For how much are we going to debit of
For
the new?
just 1,000. We transferred
Okay.
1,000, yes. 1,000 from the checking bank account to the savings bank account.
Yes.
Okay. We're going to create a last invoice for today's session. So it's clients and revenue. One more time, you go to the client invoice and we will create an invoice. Okay. Right, the invoice is on, okay, the date is March 29th. And you select the action line as the customer. Okay. You validate that it's pay later, is not cash, it's pay later. And you select A18, web server. Okay. The quantity that is going to be sold is two units out of the A18 web server. This is the price. And of course, the early payment terms, if you're offering the early payment terms, there is nothing offered to action line. You can just fill, for example, 30 days only, 30 days with no discounts. 0. It's a regular sale transaction. So you can see the report, display the revenue transaction details. Okay, that's fine. And you process. So what is the advisor, guys? What happened here? Before that, you click on, yeah, you clicked, I'm clicking on process, but there is an advisor, but I have to read it carefully. This revenue will cause the client to exceed the credit limit. Are you sure you want to process this transaction? What do you mean by you're going to exceed the credit limit? So you remember, guys, when we set in the parameters for these customers, so I said that no, I don't want to proceed. But if I go to action line, okay, action line, and I kindly invite you to remember the statistics. You remember the statistics tab? What is the credit limit? 3,000. So you cannot sell to this customer on credit for more than 3,000. So that's why there is an advisor saying that, okay, you are going to sell to this customer for more than 3,000, which is exceeding the credit limit. Are you certain? So I click on process one more time. Yes. Okay, I can say that. Yes, I can. The transaction has been processed, journal number 21. Click on OK. Another advisor. Entries just processed caused one or more inventory items to drop below the reorder point. Print the inventory item quantity report to see which item to reorder. Okay, so the system is informing you, yes, you sold 2 items of A18, right? But this is making the A18 dropping below its, let's say, minimum level of inventory. So allow me just to go back to the inventory and services, and under inventory and services, you see that this is A18, right? You go, click on A18. So guys, look at the minimum level. What is the minimum level? It's 5. So if you sold, so we were in the 6 items, if we sold 2, so the minimum level, we drop below the minimum level of 5, so we have 4. So that's why the system is systematically offering to you, the advisor, saying that, okay, please reorder because you are dropping below the minimum level. Okay, and of course, in the inventory and services module, you have a list of reports that you can exploit. You see, you can find, for example, inventory quantity. Inventory quantity you can display. Okay, look at this report, guys. That is, of course, the system is we do have in this example only 3 items, but in another company we can find thousands and I don't know, million of items. It depends on the company that we're dealing with, right? So you have A13. The quantity existing is 182. The minimum quantity required is 25. So there is nothing special to say that. Okay, so I'm just going to enlarge this to make them clear. See, on supplier order, nothing. You see that nothing. But I would like to get your attention on the web server, A18 web server item. The quantity existing is 4. The minimum quantity that should exist is 5. And there is nothing yet in process when we talk about the order. Okay. And the clients or on client order is nothing. You see that? Of course, the reorder is, or to order is 1. So here is 1 is what? 1. At least we have to reorder 1 to arrive at this 5, which is the minimum. Okay, so there's difference between the minimum and the quantity existing. Okay, the next time, guys, we stop here. So the next time we're going to make reorders for the A18. So when making the reorder of A18, we're going back to this inventory quantity to see how it looks like. Of course, you have a list of reports that you can exploit: inventory summary, you see, but the quantity is fine. You see that how well you are managing the quantity. Okay, if you are well managing the quantity, so of course to reorder, for example this one, so to reorder you'll never find it 1. So if you do have an order that is in process, so you'll find it there. So the next time we'll be finishing this inventory quantity tab. All right, guys, if you have any question, please let me know before that we close today's session.
Everything is clear for me.
Okay, Zakaria. And for the rest of the students, if you have any question, please let me know. If there is no questions, I can say that, okay, that's fine for today. So we have to stop up to this level.
Professor,
Yes, Rami.
for the A13, is there for the 125, because I don't have the quantity as the same as you. I have the 125 in process for the supplier.
Are you using the same database as mine?
I've been following you, Professor, throughout.
Okay. Maybe you missed something. Maybe I say that, maybe.
Okay.
Maybe there is something missing, maybe. And most likely it is the case, Rami, most likely. So, okay, most likely it is the case. All right, so, all right, guys, thank you so much. We're going to close today's session, and we keep in touch for the next time meeting. I don't know whether it's going to be face-to-face or online, but just before they close the session, I'll let you go. I say, okay, do you have other questions?